Hey guys, welcome back to Miniba Invests. In today's video, we'll be talking about Bitcoin recently hitting the highly anticipated $50,000 mark and what that means for the future of crypto, some catalysts that will drive the price of Ethereum past 3,700, and then finally I'll be sharing with you all the best way to avoid getting your crypto hacked. I have very exciting news to share with you all today, so make sure you guys stick around till the end and don't miss out on anything. In return, all I ask is for you to smash that like button, subscribe, and press the bell icon. So, a lot of people were anticipating that the price of Bitcoin will go parabolic once it crosses the 50k mark. Well, the opposite of that has happened. As soon as Bitcoin touched 50k, selling pressure increased and we saw a quick decline back below 50,000. So why did this happen? Is the selling pressure going to continue and the price of Bitcoin will fall further down? Or is this nothing more than a minor correction before Bitcoin's price explodes through the ceiling? First, let's take a look at what the crypto whales are doing with their Bitcoin holdings. For new investors, whales are investors that have very large holdings. They hold enough cryptocurrency that they have the potential to manipulate the currency valuation. Because of this, it's very important to keep track of what they're doing, as generally the market follows them. Of course, this is not the only factor that drives the price, but it's definitely an important one to keep an eye out for. This graph shows us exactly what the whales are doing. Here's the decrease in whale holdings. Maybe they're just waiting for a better entry, but after a big increase a few weeks ago, haven't seen much follow through. On the top here, you have names of the biggest whales in crypto. You have Grayscale Holdings, and there's BTC Purpose Bitcoin ETF holdings, just to name a few. This green line represents these whales' crypto holdings, and this gray line represents the price of Bitcoin. As you can see, since roughly around August 12, the amount of Bitcoin these whales hold has been decreasing significantly, implying that they have been selling. This enormous selling pressure is one of the reasons why Bitcoin could not sustain a 50k per coin valuation. So why are whales selling Bitcoin? This is what QCP Capital had to say. Funding rates and future premiums in both Bitcoin and Ethereum actually continue to be relatively low and muted. So let's break this down into two parts: funding rates and future premiums, so you guys better understand what's going on. Funding rates tell us what the traders are doing. Are they predicting the value to go up or go down? Positive funding rate means that traders are generally bullish or are speculating that the price will increase. Negative funding rate, however, means that traders are bearish or are speculating that the price will decrease. Right now, the funding rates for Bitcoin and Ethereum are low, meaning that overall traders are selling Bitcoin, which in turn will decrease its price short term. Second part is future premiums. This is the percentage return investors get for holding Bitcoin. Higher the future premium, the more money investors make. Lower the future premiums, lower the money that investors make. Right now, the future premium for Bitcoin is low, so it's not worth it for QCP to hold it. It's important to note that funding rates and future premiums are constantly changing, so this only tells us how the market is behaving in the short term. It doesn't tell us anything about long term. The next part of QCP Capital's message reads, "This means most of the rally has been driven by demand in physical spot, rather than from leveraged speculators." This is interesting, because QCP Capital is speculating that people are buying Bitcoin right now, not because the technical analysis is in favor, but because people have a fear of missing out. People are buying Bitcoin right now because they don't want to miss the boat, or in other words, FOMO. This is exactly what Arcane Research believes as well. They wrote, "The fear is gone for now, and the market is optimistic." Bitcoin's rise towards 50,000 pushed the crypto fear and greed index to extreme greed territory this week, before the more recent decline. People are greedy right now because Bitcoin has increased a lot in a short amount of time. This has created a euphoric market, where the price surpasses the actual value of the asset. And whenever an asset is overvalued, what do the whales do? They sell. Warren Buffett famously said that it is wise for investors to be fearful when others are greedy, and greedy when others are fearful. Exactly what we are seeing hedge funds do. Let me put it into perspective for you how much the whales are selling Bitcoin right now. Leverage funds, typically hedge funds and various types of money managers, held 16,000 short positions in Bitcoin futures listed on the Chicago Mercantile Exchange. The tally of short positions has increased by 6,000 since July 20 to hit the highest in 3 months. So yeah, long story short, whales are speculating a decrease in the price of Bitcoin for the near future, and they are putting their money where their mouth is. Another significant catalyst for the recent decrease in Bitcoin is that Bitcoin trading volume has stayed subdued as prices recover. According to Arcane Research, although Bitcoin broke out to a 3-month high over $50,000 on Sunday, trading volume hasn't picked up. The 7-day average real Bitcoin trading volume is still around 5 billion, less than half of what the market witnessed the last time Bitcoin was at 50,000. Trading volume refers to how much people are buying or selling. General rule of thumb is that a higher increase in price means that there is more interest in the asset. Therefore, the trading volume should be high. If the price increases but the trading volume remains low, then that's an indication that the asset is overvalued. Once again, when whales believe an asset is overvalued, they sell and the price falls. This graph shows us a similar trend. I am short-term bearish. Drop in illiquid supply ratio and coins moving onto exchanges. The blue line on the graph represents the illiquid supply shock ratio. This is the ratio of coins held by investors with a history of accumulating coins versus held by speculative investors with a history of buying and selling. As you can see, it has recently declined sharply. Last time it declined was in May, when Bitcoin price fell by 50%. The purple line is the exchange supply shock ratio, and it's also steadily declining, which is not a good sign short term. To summarize, Bitcoin can see a drop in price in the short term because there are a lot of bearish signals, including low trading volume, low funding rates, low premiums, decreasing illiquid supply ratio, decreasing exchange supply ratio, and also because whales are selling and taking profits. So the truth about 50k Bitcoin is that as of right now, we're not ready for it. The trading volume is not enough to sustain it. Does that mean Bitcoin will never hit 50k again? Absolutely not. It's important to note that all these bearish indicators I've mentioned are all short-term and don't tell us anything about how Bitcoin will perform long-term. Also, any significant news can change all of this. Government regulations, hacks, tweets from Elon Musk are a few examples of things that could supersede all these bearish indicators. So if you are long-term in crypto like me, then there's nothing to be scared of. Because if the price falls, it will be nothing more than a buying opportunity. On the other hand, if you were planning on taking some profits in the near future, now would be a good time to do so. Share your comments down below. What do you think will happen to the price of Bitcoin in the short term and in the long term? Next up, we have positive news for Ethereum holders. Ethereum looks ready for a supply shock. This is because of 2 reasons. The circulating supply of Ethereum is drastically decreasing due to EIP 1559 suggesting an incoming supply shock. Second, being that Ethereum has successfully retested this blue lower high resistance as new support and is now in the process of breaking out beyond it. Why is the support around 3100 so important? This is because transaction history shows that the $3,140 to $3,234 price range is indeed a crucial interest area. The IOMAP model shows that more than 850,000 addresses have previously purchased over 9.5 million Ethereum around this price level. Given the magnitude of this demand wall, bears will struggle to push prices down. Ethereum holders within this price range could do anything to prevent seeing their investments go out of the money. They may even buy more tokens in the event of a downswing to prevent prices from falling further. With a lot of investors buying Ethereum at the $3,100 range, this appears to be a very strong support level. Another catalyst that will push Ethereum's price beyond 3,700 will be the decrease in the supply of Ethereum. Since the beginning of the month, more than 842,000 Ethereum have been depleted from trading platforms, representing a 5.32% decline. Roughly 83,500 Ethereum have been burnt since the implementation of EIP 1559 in the London hard fork. Although this is good news, the overall crypto market highly depends on Bitcoin performing well. As I mentioned before, Bitcoin has bearish signals right now, so that can negatively impact Ethereum as well. It will be interesting to see how Ethereum performs in the upcoming weeks. Lastly, I want to give an update on a news I talked about earlier on this channel, Poly Network. It was recently hacked and the hacker took out over $140 million. News has just come out that Poly Network gains access to wallet containing $140 million. The Poly Network hacker has shared the private key to multi-sig wallet containing over $140 million worth of the takings from this month's record-breaking attack. Last week, the hacker deposited most of the stolen funds into a multi-sig wallet controlled by both parties. The Poly Network team has thanked the hacker and announced that it was ready for a new journey. It's good to see that Poly Network has recovered all the funds. Let this be a lesson for all of you that the safest way to store your cryptocurrency is not on exchanges. Even Coinbase was recently hacked. Cold wallets like paper wallets or hardware wallets are your best bet, and I would highly recommend you to keep your long-term investments there. And that wraps it up for today's video. Make sure to like, subscribe, and press the bell icon. This will be greatly appreciated as it helps our small community to grow. Until next time, take care and keep investing.